All right, welcome everyone. Thank you for joining us tonight. My name is Allison Carmola, and I'm a librarian with the Beatley Central Library. Tonight, our program is dealing with student loan debt with Jessica Medina, and I'm going to go ahead and turn things over to her.
Hello, everyone. Just as a reminder, this is being recorded. So if you have questions or if you have to drop off from the presentation, the Beatley Library does post the recordings to their YouTube channel. So Allison can talk a little bit more about that. And when we get to the end, she'll have some updates on what's going on at Beatley, because everything is always changing. So we'll find out exactly what's going on with the library. But just for your information, it is being recorded, and if you do have questions, we're going to have some time at the end to go over any personal situations that you want to go through or specific questions you have about student loans that I don't cover in the presentation itself. It is a lot of information that we have to cover, so I do try to get through as much as I can and then make sure we save some time at the end for questions, because as you guys all know, student loan debt is quite a complicated topic, even though it shouldn't be. So let's get started. There we go. So student loan debt is different than other debt. And I think this is one of the most important things that you want to pay attention to when you're even approaching the issue, right? So most typical American graduates have about $35,000 of student loan debt. I was a practicing attorney for over 15 years, and my clients are generally lawyers, and they get to graduate with around $145,000 of average student loan debt. So don't worry, however much debt you're carrying, I've seen more. Don't worry about it. We can make a plan. But one of the other things that's complicated about student loan debt is there are so many different types of student loans out there. It can be very difficult to figure out what kind of loan you have, what kind of payment plans are available. And because the service providers that manage your loan often don't have the best information, or at least aren't trained to give you the best information, it can lead to a lot of confusion. And also, some people have, a philosophy that all debt is bad and all debt needs to be paid off as soon as possible. But paying off your student loans in particular as soon as possible is not the only strategy. And we're going to talk about some other repayment strategies that might be a better fit for your life and your lifestyle today. Hello, I am Jessica Medina. If you've been coming to these personal finance webinars we've been hosting, oh gosh, since the pandemic started, then you probably know that I'm a former lawyer turned accredited financial counselor. Because I'm a lawyer, I have to give a disclaimer that I do not give legal advice. I also don't give investment or tax advice, but I can help you think through your student loan repayment strategy. And that's what we're going to talk about today. Just a little bit about me. I graduated from Columbia Law School back in 2004. I was a single mom of twins, so that was super exciting. And that's how I started my legal career. And I also got to start my legal career with over $200,000 of student loans. So when I tell you that I am familiar with these repayment strategies, it is because I have studied them to get myself out of a debt hole. And now I help my clients with their student loans and figuring out the best repayment strategy for them. So today we're going to go over some student loan basics just to make sure that you have all of the foundational pieces to be able to start on the journey to getting rid of your student loan debt. We're going to talk about the different repayment strategies and how to figure out which one might be the best fit for you. You guys may have heard that there were a number of changes to the Public Service Loan Forgiveness Program, and there are some waivers in effect right now that many people are taking advantage of. And we want to talk through what those changes mean and who qualifies for forgiveness that might not have qualified before. We're going to talk about the steps that you want to go through when you're making a plan, and I'll have some free resources available for you that you can use to come up with your own student loan repayment strategy. And of course, we're going to save some time at the end for questions. Let's start with the basics. There are two different types of student loans. So when people say, oh my gosh, I have this much in student loans, you want to figure out what kind of loans do you have. And generally speaking, there's two big categories. There's your federal student loans and your private student loans. So you want to figure out what camp do your loans sit in? Do you have a mix? Is it all federal? Is it all private? Because that's really going to affect what the best repayment strategy is for you. Federal student loans are owned by the U.S. Department of Education. And they've been called many different things over the years, which is why it can be so hard to figure out what kind of a loan that you have. They come in a couple of different flavors. And so you might have seen direct subsidized or direct unsubsidized loans, direct plus loans. Those apply to parent plus loans and graduate plus loans, which you get for going past undergrad. You might have a direct consolidated loan if you put a bunch of your federal loans together. We're going to talk about consolidation and how that's different from refinancing. You might have some older loans if you are of my generation. This may be called the FFEL loans. It was through the Federal Family Education Loans, also called the Stafford loans, or maybe you have Perkins loans. So you want to figure out what is the universe of federal student loans that you have, if you have any. And one of the best places to get that information is at studentaid.gov. The studentaid.gov website is one of the best federal websites available. It is very easy to maneuver. It has a wealth of information, both about the general student loan programs, including forgiveness and repayment assistance and default and forbearance, but also you can create an identity and they can track down your federal student loans for you. So you're gonna get your login, they'll verify who you are, but then they will have a record of all the federal student loans that are outstanding and what kind of loans they are, what kind of payment plan you're in. And so that will help you kind of get started in tracking everything down. The other type of student loan out there is a private student loan. So these loans are owned by and serviced by private lenders. So they're basically owned by banks that wanted to loan you money for school. Just like you could go to a bank to get a loan for a car, you can go to a bank and get a loan to go to school. But it's not a federal loan, it's a private loan, which means that the bank controls the payment terms. So if you have any private student loans, maybe you took some out for the summer in between school sessions, or maybe in undergrad, you weren't able to qualify for enough federal money in order to cover your tuition costs, so you had to take out a private student loan. In order to find these, you should have some sort of private, lender service provider that's sending you statements, sending you bills, and sending you updates. But if you cannot find all of your private loans and you think you might have some hidden, it's always a good idea to check your credit report. All of your federal and private student loans should appear on your credit report. And because we are still in pandemic times, you can get free credit reports from annualcreditreport.com. You can get them from all three of the credit reporting agencies to make sure that you can see every single loan that might have been, on your record, to make sure that you have the full and complete picture of your student loans. So once you figure out exactly what kind of loans you have, you will also probably now have a sense of how much you owe in student loans, what their interest rates are. It can be a little hard to figure out what the federal loan interest rates are right now because they're in the relief period where everyone is set to 0% interest. So what I've told my clients is go back and find a really old statement from maybe like January 2020 or even before to see what the interest rate was at. You might have a variable interest rate, but many of the federal loans are fixed. And so, whatever interest rate you were being charged before the pandemic hit will be probably the same interest rate that, will be started up again once the relief period ends. And so once you figure out how much you owe, we need to figure out what you're going to do about that debt. Now, there's three different strategies that you can generally use to attack your student loan debt. There's the repayment ASAP method, there's forgiveness programs, and then there's something that I call Repay Your Way. So with repayment ASAP, that's what a lot of people, that's what you hear about. Oh, as soon as you graduate, you should be paying back your loans as soon as possible. And if you're going to go that route, then there's probably going to be some strategic moves that you can make with respect to your loans, and we're going to talk about what that looks like. With the forgiveness programs, there's a number of forgiveness programs out there, but they only apply to federal student loans. So that's why it's so important to figure out what kind of loans do I have? Are they federal? Are they private? Because you want to know whether any of these federal relief programs apply to your loans. And we're going to talk about the different forgiveness programs that are out there and available. The last strategy is what I call the Repay Your Way strategy. This is a strategy that you would use if you are not exactly sure whether you can repay them as quickly as possible, or perhaps you are not eligible for forgiveness. You want to come up with some sort of combination of strategies to make sure that you are paying off your student loans, but also achieving other financial goals and meeting your other financial obligations in your life. So what are the guidelines for when each strategy makes the most sense? If you wanted to take a look at your gross annual salary, so how much money are you bringing in before taxes over the course of the year, you want to compare that number to your total student loan debt. And if your salary is greater than your total student loan debt, then repayment ASAP is probably the best route for you. It's going to cost you the least amount of money. I'm not saying it's not going to be painful, but it will be painful for the least amount of time. And so if that is the situation that you're in, then you're going to want to think about, potentially refinancing. We're going to talk a little bit about that, but getting those loans taken care of while you have the money to do so could be the right choice for you. If the total debt load that you're carrying is greater than your annual salary, and for many of my clients, this is the situation they find themselves in, even if they land at a big law firm and they're making a fancy lawyer salary, you're going to want to take a look at the forgiveness programs. Like I said before, these only apply to federal student loans. And that being said, for many of the folks who graduated, after me, certainly from law school, but in, right around the 2010 period and after, you guys had access to the Graduate Plus Loan Program, which basically allows you to take out as much federal money as you needed to cover the cost of attendance. And so for many of my clients and for many folks right now, if you have graduate school loans, it's probably all federal, which means that you will have access to these forgiveness programs. And so we're going to talk about the Public Service Loan Forgiveness Program, the IncomeDriven Repayment Forgiveness Program, and I'll talk a little bit about teacher forgiveness programs as well. The last option is where many of my clients find themselves when your salary and your debt load are just about even. That means that it's not clear that getting them repaid as quickly as possible makes the most sense. It's also not clear that forgiveness is going to make the most sense over the long run. So you might have to do some jiggering with your financials over the course of your entire career to figure out when can you be more aggressive with your student loans and when do you need to be more aggressive with other financial goals that you may have, right? The point of your entire career is not just to pay off your student loans, it's also to allow you to have a life, allow you to raise a family if you want, allow you to stop working one day if you don't want to spend the rest of your life working until you die. And so in order to prepare for those financial goals, we can't just be focusing on student loans. And that's where the Repay Your Way strategies can come in for people who are right on the cusp and don't really have a clear repayment ASAP or forgiveness that makes sense for them. So if you fall into that first category where your gross annual salary is larger than your overall debt load and you are considering repayment ASAP, these are some things that I want you to take into consideration before you make any big or, shall we say, irreversible moves. You're going to probably want to refinance your student loans. Refinancing means that you are taking either federal and or private loans and turning them into a new private loan. You cannot refinance federal loans. So you'll never be able to get a lower interest rate on your federal loans than you have right now. That being said, if you are trying to get your loans paid off as quickly as possible, refinancing might make sense because on the private market, especially today, interest rates for private loans are much lower than what many federal student loans are set at. And when you take out your federal student loan, you have a fixed rate that is set from the time that you take the loan out. So regardless of what's happened with interest rates since then, you might still be paying 6.5%, 7%. I've seen some of my clients have interest rates as high as 7.9%. If they refinance, they might be able to get a student loan at 3.5%. That's a huge amount of interest that they're going to save by refinancing their student loans. The issue is that once they refinance them, they will lose all of the federal benefits because, like we said, when you refinance, you turn everything into a private loan, which means you no longer have access to all of the lovely federal benefits that we all got to take advantage of during this COVID period. If you had refinanced before the pandemic, you would still be making payments and you would still owe the bank every month for your student loan payments because you wouldn't have access to the 0% interest or the $0 payments that were part of the federal relief. So whenever you're refinancing, you want to be very careful that you are ready to handle those payments for the entirety of the repayment term. That means you want to have some income security. You want to make sure that you're going to be in a job and earning money where you can make that student loan payment at the refinance rate for the entirety of the refinance term. And so just thinking about, how do you feel about your career? How do you feel about the refinance term? With my clients, what we often do is, it's really fun to think about refinancing your student loans and getting them paid off in 3 years or 5 years. But putting that kind of pressure on yourself might be a lot in terms of, required financial obligation. So also look at some longer refinance terms. Maybe a 10-year plan makes more sense, or even 15 years. Because just because you refinance into a 15-year private student loan, it doesn't mean you have to take 15 years to pay it back. You can pay extra when you have the money, but you won't be on the hook for such an aggressive monthly payment. So it's something to think about, especially with respect to if you don't feel like your job is completely secure, you might not want to refinance at all. But if you are going to refinance, then you want to be looking at a term that is really comfortable given your other financial obligations. And in that vein, we want to make sure that refinancing and the new monthly payment makes sense for your lifestyle. If you are going for an aggressive payment schedule, then you probably don't want to have a lot of other financial obligations out there that need to be met. Many of my clients are new in their careers, but they're also simultaneously building a family. They're living in a major metropolitan area. They are paying for daycare, mortgages, all of that adds up, and adding a huge student loan payment on top of that that has no federal protection benefits can really be a bit of a burden. So you want to think through, am I going to be able to manage this monthly payment in the context of the life that I want to lead, and also, handle my other financial obligations. There are two ways that we can make repayment a little bit easier. We talked a little bit about refinancing, but I want to differentiate that from consolidation. Consolidation is what we do with federal loans. So consolidation, that process takes multiple federal loans and combines them into one new federal loan, often called a direct consolidation loan. And oftentimes, if you took out federal loans in undergrad and you took out, federal loans for grad school, you could have, 8, 10, 14 individual federal loans that are all out there with different interest rates and with, different amounts, and they're all on different payment schedules. So if you consolidate all of them into one new federal loan, what they do is they take the weighted average interest rate. So that's what I meant when I said earlier that you're not going to be able to refinance. You're not going to be able to get a lower interest rate on your federal loans. It may feel like that, but they're really just taking the weighted average of the interest rate across all the federal loans you're consolidating and giving you that interest rate on the new consolidated amount. But with a consolidation loan, you still have access to the federal repayment options. It just means you have one payment that you have to make. But it can, under the old rules, before the public service loan forgiveness waiver went into effect, when you did a consolidation, it would restart the payment clock on your public service loan forgiveness payments. During this waiver period that runs through the end of October of this year, consolidation can actually be very powerful to give you credit for payments that might have been ineligible for public service loan forgiveness before. We're going to get into public service loan forgiveness in great detail later in the presentation, so I don't want to go too much into it now, but I just wanted you to understand where that warning comes from for after the waiver ends. In addition, with the consolidation loans, you will have access to the income-driven repayment plans, which become very important when you are working on a forgiveness strategy, or when you're just looking for a way to be able to pay your student loan monthly payment and still be able to live your life. Like we said before, refinancing is different than consolidation, and sometimes people mistake the two terms. Refinancing takes any kind of loan, whether it's private or federal, and turns it into a new private loan. So that just means that a bank has bought all of your other loans and they're offering you a new loan, and they pay off all of your old loans, and then they give you a new loan with a new amount, totaling whatever the payoff amount was, with a new interest rate. And that's where the power of refinancing comes in. Especially in today's environment of very low interest rates, refinancing can be very powerful with a repayment ASAP strategy like we talked about earlier. That being said, because these are private banks, they don't have to give you money. they're not like the federal government. They're not in the interest of having you pursue education. They only want to give money to people who are worthy of getting the money in their eyes. So there are going to be income requirements. They're going to check your credit. So if you have a low credit score, maybe because you don't have a lot of credit history or because you missed a couple of payments here and there, it may be difficult to refinance your student loans, especially if it's a large amount. So you might want to look into getting a co-signer. That being said, that person will be on the hook for the full amount of the refinanced student loan. So it's something that you both need to be aware of. But that being said, you could get access to much lower credit, much lower interest rates with a refinance. But again, you will lose access to all of the federal protections. So all that lovely relief, you wouldn't have gotten any access to that. Also, if you lose your job, private banks have very different forbearance and default rules that apply. So there are some protections, but nothing close to what you get in the federal realm. So it's always very important to consider carefully whether you want to refinance any federal loans, because this is also an irreversible decision. You can never take a private loan back into the federal world. So if you're going to move your federal loans private, you just want to be sure that you want to do it. So let's say you're not thinking about repaying your loans as soon as possible and you want to explore some of the forgiveness options. There's a couple of different forgiveness options. And like I said before, these only apply to federal loans. We have income-driven repayment, the public service loan forgiveness program, and then also teacher forgiveness programs. Let me start with teacher forgiveness because it is the smallest and affects the least amount of people. But you can have up to $17,500 of your student loans forgiven by working as a teacher in a particular type of school. Depending on what subject matter you teach, you could get up to $17,500. That's the max. If you're teaching other subjects, you might not be able to qualify for that much, but there's a lot of information about the teacher forgiveness programs on the studentaid.gov website. And if you are a teacher or if you are considering becoming a teacher, I would definitely suggest you look into it because it can be used in conjunction with some of these other forgiveness programs. The most popular forgiveness programs are the income-driven repayment and the public service loan forgiveness. So that's where we're going to spend the majority of our time today. The income-driven repayment forgiveness plan is something that some people aren't really familiar with. They might be in an income-driven repayment plan, but they don't know that after a certain number of payments, their student loan balance is actually going to be forgiven. It's baked into the income-driven payment plans. So if you are in Repay, Pay, IBR, or ICR, you are already signed up in an income-driven repayment plan, which means that all of those payments are qualifying payments toward your 20 or 25-year forgiveness timeline. After the 20 or 25 years of qualifying payments, the remaining balance of your student loans will be forgiven. That can be a huge issue for folks who maybe, went to grad school, became lawyers, went straight into public interest, and made very little money their entire career. Right? You might not be making a lot of money, but the federal government also understands that if you make payments for 25 years and your loans still aren't paid off and all of your payments have been reflected of your income, then maybe you can't afford the student loans. So they forgive the remaining balance, but there's a catch. Of course, there's a catch. But so some of the things that you want to watch out for with the income-driven repayment plans, they take a percentage of what they call your disposable income to figure out what your monthly payment should be under each of these plans. And there's too many plans for me to talk about here, but you can find out a lot of information about them on studentaid.gov. They range from requiring 10% to 20% of your disposable income, which is a formula that the government uses. It's basically like, what do you make after taxes and some of your lifestyle, but not much of it. It really depends on how many people are in your family. But one thing to pay attention to is the different plans have different rules about what happens when your income increases. And some of the repayment plans do not have a cap on how much they can charge every month for your student loans. Some of them do have a cap, right? So for example, The Repay plan has no cap on how much you can pay toward your student loans every month. So if you owe hundreds of thousands of dollars in student loans and you're in an income-driven repayment plan and you're in Repay, and in the beginning of your career, you're not making a lot of money, and so your payments are really low, which basically means that your student loan balance keeps going up and up and up because you're not even covering the interest. When you start making really good money, the government is going to want a percentage of that income to pay off this student loan balance. And they're not going to cap how much they're going to charge you every month. So the forgiveness timeline and has to be really carefully analyzed against your career trajectory to make sure that you're not just going to be accruing a bunch of interest for a number of years and then actually end up paying all of it back because you make enough to do so, but you've now paid through the nose and paid way more than you ever had to, right? At that point, when you start making more money, we definitely would want to refinance and get you out of the federal program and into some better interest rates. But there are some income-driven repayment plans that do put a cap on it. Pay is one of them. And so that's one of the best plans to be in. If you're eligible, there will be a monthly cap, and it's set when you first, start paying your loans. And so even if you end up, making more money, you will always have a maximum that you can pay on your loans. And so that's something to watch out for. Another thing that is a bit specific about these income-driven repayment plans is paying attention to your tax filing status. Some of the income-driven repayment plans allow people who are married but filing separately to only count one individual income to figure out how much the monthly student payment should be. But some of them count you as a joint unit regardless of how you file. And so you want to pay attention to what kind of income-driven repayment plan am I in? And does it count both my and my spouse's income as joint income, regardless of our filing status? If you're in one of the income-driven repayment plans that does differentiate whether you file married filing jointly or married filing separately, you really can see great savings in terms of your monthly student loan payment amount if you're not taking your spouse's income into account. Right? So if you are not making enough money in order to, make a student loan payment that covers the interest every month, but your spouse happens to make, way more money than you don't want their income counting toward your student loan payment because you're just going to end up paying off the loans. The payment is going to be too high. If you can separate your income and the government is just looking at you and, you're fulfilling but low paying job, then your payments will remain really low and you'll eventually have your entire balance forgiven. So that's something that you want to pay attention to. And I actually did a Zoominar on all the tax strategies related to student loan payments. I did it with a certified financial planner who works for one of the best student loan analysis shops in town. It's called Student Loan Planner. And so that's on my website, and you'll see links to it later in the presentation. It's at www.jessicamedinallc.com. Just check out my blog. You'll see a bunch of Zoominars on very specific student loan issues. And the tax strategies one is a really good one if this seems like an issue that you might be facing. The last part about these forgiveness programs is, like I said, there's a catch. Of course, you do get the balance forgiven at the end of the 20 or 25-year time period, depending on what kind of loans we're talking about. But there is going to be tax liability on that forgiven amount. So the government is going to treat the forgiven amount as if you received that income that year. So you would want to pay attention to what is my tax rate for the year that this stuff is going to be forgiven? How much am I going to owe in taxes on the forgiven balance? And you just want to start saving up for that day. Remember, this is like 20 or 25 years off if you're at the beginning of your journey. So we have time to save up for it. We're also going to just keep our fingers crossed that the government is going to get their act together and change this horrible rule that there's tax liability on forgiven amounts. Obviously, if you couldn't afford to pay off your student loans for 20 or 25 years, what makes them think that you can afford a tax bill at the end of the road? It hasn't happened for a lot of people yet because we haven't seen the 25-year time period come to fruition, but it's coming, and there's now some precedent for tax-free forgiveness. So we're hoping in the student loan world that this won't be a problem in the future, but because it's still on the books, you want to be prepared. Just start saving up for it. The Public Service Loan Forgiveness Program. This is the one that gets all of the attention, especially lately, because there have been so many changes with the waiver that went into effect. So I'm going to talk to you about how it used to work, at least how it worked before the waiver went into effect, because the waiver will end. And one day it may go back to working this way, which wasn't the best. And I want you guys to be aware. So in order to qualify for forgiveness under the Public Service Loan Forgiveness Program, there's many hurdles that you have to overcome. You have to have the right kinds of loans. So this only applies to, you want to have the direct loans. And so if you had Stafford loans because you're old like me, you want to make sure that you have consolidated those into direct consolidation loans so that you have the right type of loan to qualify for the Public Service Loan Forgiveness Program. You also need to work for the right type of employer. The Public Service Loan Forgiveness Program, there's only certain employers that are eligible. It's generally all government entities from federal, state, and local level, also nonprofits that serve 501c3s, and some other, like public servant organizations, but you really want to make sure that you are checking with the Public Service Loan Forgiveness Program to make sure that your employer is eligible before you just work there for years and years, assuming that they're eligible. You also need to be in the right repayment plan. We were talking earlier about income-driven repayment plans. That's only one payment plan available to federal loans. So even if you have the right loan and you're working for the right employer, you have to be in the right payment plan. And one of the sneaky things that a lot of service providers did when people graduate is they put you into what are called graduated payment or extended graduated payment plans. Those payment plans have the lowest monthly payment possible because you basically make tiny payments in the beginning and then they bump you up and balloon you to larger payments, assuming that your income is going to go up in the future. But those are not income-driven repayment plans. Those are a different type of payment plan that doesn't qualify for public service loan forgiveness. And so if you've been making payments under that, they would not have been eligible payments and wouldn't count toward your forgiveness timeline. So you want to make sure that you're participating in the right kind of repayment plan, which would either be the 10-year standard plan or an income-driven repayment plan. The fourth step is you want to make sure that you're certifying your employer regularly, at least annually, because that way you make sure that they're counting all of the payments correctly and you don't have to backtrack and certify an early employer that might have gone out of business or might have a new, might have been absorbed by another company. The paperwork can be a nightmare, and you just want to make sure that you're staying on top of the counting of your eligible payments so that nobody misses anything. Lastly, after you've made 120 qualifying payments and you've satisfied all of the hurdles, your student loan balance will be forgiven and it's tax-free. That's why this program is so powerful. That's why it can really change people's lives. And that's why public service really, could be a great way to get your student loans forgiven. That was the whole point of the program. However, because of all these hurdles and because of all the miscommunication, there were many, many people who were working for a federal employer but had the wrong kind of loan, or were in the wrong kind of payment plan, or they were, working for someone that they thought qualified, but they didn't qualify. So then after their 10 years of service, they filed for forgiveness and they were denied. And this was a huge issue. And the government has actually made some inroads in trying to fix what was wrong with the Public Service Loan Forgiveness Program. So right now, there is a limited waiver opportunity where even if you messed up some of those steps over the past 10 years or more, you have an opportunity to have those payments count as eligible payments. So anyone who has been working for a qualified employer, meaning you've been working at any state entity for any number of years, federal, state, or local government, or even working at a 501c3 nonprofit, you should be looking into how many qualifying public service loan forgiveness payments can you get credit for. If you, and all of these waiver opportunities are going to go away by October 31st of this year. So it's really important for you to make sure that you are paying attention and taking whatever steps are necessary to make sure that you get whatever forgiveness you might be able to qualify for. The first waiver has to do with loan type. If you had one of the older loans and you didn't specifically have a direct loan, you now have an opportunity to consolidate those older loans into a direct loan and get credit for all of the payments you made on those unqualifying loans. So that's huge for anybody who's old like me and had Stafford loans that weren't eligible under public service loan forgiveness before. They're eligible now, but you have to get them consolidated into a direct consolidation loan in order to get those payments to qualify. Also, they realized that no one understood all the different repayment plans. So if you were making payments on a payment plan that was not an income-driven repayment plan or the 10-year standard plan, you can also have those payments counted toward your public service loan forgiveness total of 120. So that's another way that they are expanding who can qualify for this forgiveness. And so now, there are steps that you can take to see if maybe you can qualify for forgiveness that you wouldn't have been eligible before, but you need to make sure that you make all of your moves before October 31st of this year. And I will tell you, I have personal experience of my clients and my own friends who are old like me, who have had the entirety of their student loan balance forgiven, and they never thought that it would happen because they had the loans weren't eligible or they were in the wrong payment plan. They are fixing things, but you need to act soon to make sure that you have all your paperwork in order and that they're counting everything the way that it needs to be counted. The last strategy is what I call the Repay Your Way strategy. This is basically an amalgamation of a bunch of creative strategies that are going to depend on what's going on in your life and a whole bunch of factors that you want to walk through to figure out the best way to attack your student loans. So when you don't cleanly fit into a repayment ASAP or cleanly fit into a forgiveness program, you want to think about what kind of strategy is going to work for you over the long term. You want to take a look at what can your finances handle? Can you handle refinancing some of your loans into a lower interest rate, but maybe not all of them? How much of a monthly payment can you handle? What other financial obligations are you trying to meet right now? Is there a time in the future where you might be able to be more aggressive with your student loans, but you have to take your foot off the gas right now in order to address immediate concerns? Another big part about student loan debt that people don't often talk about is how it makes you feel. This can be a very emotional issue for people. There's a lot of shame and guilt and responsibility and duty wrapped up into debt in general, student loan debt in particular. This was for your education. Shouldn't you pay off your loans before you switch careers? There's a lot of those kinds of sentiments in the personal finance world. I don't subscribe to any of them. I think that if you want to pay off your debt, great, we can figure out a way to pay off your debt. If it's not that important to you, then great, let's put it into a larger financial plan to make sure that you reach all of your financial goals, because debt is just one of them. But if it's something that really weighs on you and prevents you from feeling really good about your money, feeling really good about your career, feeling really good about your life, maybe you do want to make it your number one priority. And maybe you do want to work really hard to get them paid off so that you can free up that energy for the rest of your life to do whatever it is you want to do. I will tell you from my personal experience, I had some federal loans that were super old, but they were consolidated at less than 2% interest. My plan was to basically have that be the last thing that I ever paid off in my life, because it was like free money and they were federal loans. My payment was so low every month. But when I had the opportunity to knock them out, I did. And I felt great. And I don't regret it. I also don't regret not making it a priority earlier in my life because I was busy doing other things. But I'm not going to sit here and say, oh, well, I wish I hadn't paid off my student loans. There's very few people that ever say that. But I will say you should pay off your student loans when it feels right for you and when it makes sense for your money. Lastly, we want to be paying attention to flexibility with respect to what are you going to need to be able to cover everything that's going on in your life, right? We don't want student loans to become this, elephant in the room that is the only thing that we focus on when we have other goals that we want to reach. So you want to remain nimble. And part of that is potentially, not taking yourself out of the federal student loan realm to give you that ultimate flexibility of whether you can access forgiveness, whether you can be in an income-driven repayment plan instead of just locked into a very strict refinanced term that is the same payment every month for an extended period of time. You want to make sure that you're thinking through what are you going to need at different phases of your life so that student loans always fit in. And so things to consider if you are thinking about the Repay Your Way strategy. You always want to pay attention to your interest rates, right? We talked a lot about interest rates with respect to refinancing. But when you are attacking even your federal student loans, many of them might be at different interest rates unless you've consolidated them and you just have one big federal student loan. You want to think about, are your student loans consolidated or sitting at an interest rate that is really, really low, like my federal loans were, right? If your student loans are at 1.75%, maybe you don't have to prioritize paying them off unless they really, really bother you, because there's other things that you could be doing with that money that would be a much better use of it than paying down very, very low interest debt, right? I would never want my clients to pay down a very, very low interest student loan debt when they have very high interest credit cards that aren't paid off yet. So we want to think strategically about where student loans fit in our overall financial picture. You also want to think about, are there any relief programs out there above and beyond forgiveness that you can qualify for? The CARES Act allowed employers to pay up to $5,250 per year through December of 2025 tax-free. So this was kind of a bonus that they were throwing at employers to help them help their employees pay down their student loans, and everybody kind of got a little incentive. And so you want to think through, are programs offered by your employer? If you're working at any federal agencies, some of them participate in what's called the Federal Student Loan Repayment Assistance Program. I worked in an agency at the Securities and Exchange Commission that participated, and they paid up to $10,000 per year, up to $60,000 max on your federal loans. And that was just an extra benefit. It wasn't like taken out of your salary or anything else. It was just a benefit on top of what you made every day. And that was something that I took advantage of to knock down the balance on my federal loans while I was very aggressive on the private loan side. So this is what I'm talking about when I say there's a bunch of creative ways that you can leverage everything that you might have going on to put together a strategy that makes sense for you. Also consider what at different points in your life, what other income streams or what other assets might you be able to use to knock out your student loan debt? Right? Are you going to be getting bonuses in the future that you could, throw a big chunk at your student loans? Your student loan repayment journey does not have to be the same amount every month, basically for the rest of your life, right? We can get aggressive at times. We can take our foot off the gas at other times, and that will allow us to be nimble enough to achieve all of our financial goals, just not all at the same time, right? There's going to be different phases, and you want to take that into account. But also think about, are there other assets that you are potentially investing in, or real estate, things that will grow for you and maybe grow enough to be able to knock out your student loan debt, right? That's something else to consider. Just some high level anecdotes of people who considered the Repay Your Way strategy, some things to think about, in a longer term student loan repayment strategy. If you have a lot of equity in your home, or if a relative does, they can take out a fixed interest rate HELOC, which is a home equity line of credit. They took one out to pay off their daughter's private loans because they were very high interest. And then the daughter made sure that she increased her life insurance to cover the HELOC just in case anything ever happened, to her, and she wasn't able to pay her parents back with just her monthly income. Thinking about, in today's market, a lot of people have been doing cash out refis on, investment properties, or, even on their primary property. We generally don't like to trade unsecured debt for secured debt, meaning we don't trade student loan debt for mortgage debt because you need your house to live in. But if you have extra properties lying around, you can leverage their value in perhaps helping you pay down your student loans. Also thinking about refinancing portions of your student loan collection, always considering refinancing your private loans if there's a drop in interest rates. There's no reason to not refinance as long as you can absorb the transaction costs. But also, like we were saying earlier, if you are investing, if you have other investments that you could use to pay off those high interest loans, that's something to consider, but you just want to make sure that you are seeking professional help if you're looking at anything in the investing space. A note about student loan debt relief. It is scheduled to end on May 1st of 2022. The payments are supposed to come back. The interest is supposed to come back. That being said, don't tell anyone you heard it here, but we're hearing grumblings that there might be an extension. But until it's for sure, you should assume that your payments will start again in May, and you should start preparing for that. If you haven't been putting money aside for your student loan payment, let's find out what your student loan payment is going to be and start putting that money away now, just so that you are ready for when it starts up later this year. That being said, if you have been working toward payoff, I didn't want anybody giving the federal government any money for student loans while they were figuring out what to do with student loans. You could be socking that money away, like we talked about, in a savings account. You could just have that money ready to go for when the student loans come back online. But in case there was going to be any forgiveness, we wanted to make sure that we didn't send extra money. It's much harder to get a refund than to never pay the money in the first place. If you are working toward forgiveness, you should not be paying anything toward your student loans right now if they're federal, right? Because even during this relief period, you got credit for every month that there was $0 due. So there was no reason to send any extra money. If you're in a forgiveness plan, the point is to get the most forgiven and to pay the least out of your pocket over the life of your loan. The last thing to consider is whether you have a sufficient emergency fund. While we were in this relief period, if you didn't have enough money in the bank to cover a month's of expenses, then there was no reason for you to be sending money to the federal government for student loans. Build up that emergency fund first, and then start thinking about debt repayment strategies. So in terms of making a plan, this is also simple, right? Oh my goodness, student loans, now it's totally clear. I know exactly what to do. I get it. It's not simple and it's not easy because there's all this stuff going on. There's so many different resources out there. And one would think that calling your service provider is going to be the best way to get information, and it's often not. So sometimes we just don't know what we don't know. And so there's a couple of resources that I wanted to give you to figure out your own student loan repayment strategy. I have a free 10-day email series. It's available on my website. It's jessicamedinallc.com/student loan series. You will get a step-by-step plan of exactly what numbers you have to look at and what websites you have to go to find the information you need. And it's going to walk you through exactly how to pick the best student loan repayment strategy for you. It's going to go through a lot of the things that I covered today, but this way you'll have time, you'll have all of the information in a set of consecutive emails, and you'll have all of the links to exactly what you need to go to. But you're going to have to track down all your loans. I'm going to give you access to all of the online calculators that will help you figure out what is the best repayment strategy, what does refinance look like. You want to check those rates if that's part of your strategy. And then, of course, you want to check in periodically. Just because you pick a repayment strategy now doesn't mean that it's going to make sense a year from now or 3 years from now. You want to make sure that your strategy still makes sense as your life changes and as your career changes, because student loans, as we've said, could be a direct reflection of everything else that you have going on. We don't want it to be the only thing. Other resources to pay attention to at studentaid.gov we talked about. Also, you can get a lot of information and resources on my website. Also, I talked about Student Loan Planner. They are a great company with a lot of information, resources, calculators, and they also offer student loan repayment strategy analysis. That is their bread and butter. That's all that they do. And so you do have to pay for it, but it is worth it if you're having a lot of trouble figuring out the best strategy for you. They also do the tax strategy planning. And the last resource I wanted to offer is College Loan Freedom. If you are definitely looking into forgiveness and you really can't handle paying attention to the eligibility criteria, certifying your employer every year, figuring out what your income-driven repayment plan should look like, they will handle all of that for a fee. But if you don't think you're going to be able to stay on top of it, that could be a good resource for you as well. So you can reach me at jessicamedinallc.com. Connect with me on LinkedIn. You can message me directly if you have specific questions that I'm not going to have a chance to get to today. But I post a lot of stuff on LinkedIn related to student loans, repayments, and a lot of stuff for lawyers because that's who I talk to. But join me for personal finance tips, and I would love to see you guys over there. All right, let's get into questions. Let's see, I can see 3 on here. Okay. So there's a question of how effective would it be asking our elected congressman or congresswoman to become an advocate of no interest rates on federal student loans? I mean, I don't do politics. It'll be as effective as asking our elected officials to do anything else. I mean, do it, right? Better. It'll certainly be more effective than not asking. I just don't know that that's going to be the lever that pushes things over the edge. There are some proposals out there right now, to try to get rid of student loan debt. We'll see where they actually end up going. Forbearance. It allows a student to temporarily postpone a student loan payments. There's interest rates accrued during the forbearance. It depends on the type of forbearance. And so it also depends on the type of loan. So you may be familiar with subsidized versus unsubsidized loans. The subsidized loans, the government was paying the interest while you were in school. So that's kind of a forbearance period in which they pay the interest. But if you have an unsubsidized student loan and you are in a forbearance, often the interest is accruing, but you would want to check with your service provider to confirm. Okay, well, so that's more about, let's see, interest rates. I wish that interest rates on student loans would go away, but I don't see it happening anytime soon because student loan debt is a huge industry. And this is me getting into the philosophy a little bit, but the reason, one of the reasons why federal student loan interest rates are so much higher than the private sector is because the federal government is pretty reliable. And so when you have the federal government basically subsidizing the cost of education through the student loan debt program, a lot of that debt doesn't get repaid because it's just too much and people can't handle it. But a lot of it does get repaid. So the federal government makes a lot of money off of federal student loan debt, and the colleges and universities make money because they get to increase their tuition to match how much money the federal government is willing to pay towards the tuition. So there's a lot of actors at play, and unfortunately, there are actors like the federal government, the banking system, colleges and universities. And then there's people like us who are just kind of stuck in the middle and don't have a lot of options to pay for school other than federal loans, private loans, or don't go to school, right? And so federal loans are better than private loans because you at least have the protections and you can always refinance a federal loan into a private loan. But I don't necessarily see student loan interest going away because too many people make money off of it. And I'm sorry if that's a really jaded opinion, but that's my opinion. And that's why I don't do politics. Other questions? Let me stop share. Oh no, I don't want to stop sharing my screen because I have a slide for Allison. I think you guys, if you have any more questions, you're going to have to pop them into the Q&A because I'm used to doing these as more general meetings where people can just kind of unmute themselves. Oh, just a comment. Great presentation. Thank you. Well, you're welcome. I love talking about student loans, especially now that mine are paid off. I like talking about them even more. All right, it looks like we don't have any more questions. So let me give Allison a chance to give you guys an update on what's going on at Beatley.
So as usual, we do have some changes. So the library is open to the public and has been for a while, but we will hopefully be expanding our hours and days that we're open pretty soon. So I hesitate I mean, honestly, I never like to say anything definitely anymore because so many things have happened in these past 2 years that have thrown us off the rails. But hopefully in April, you will see some changes to the schedule, some longer hours, and some of the branches that have been closed certain days of the week will be open. So keep up with our website, any announcements we put there. You can check the hours at your branch. And hopefully there will be more hours very soon. We are still doing a lot of programming virtually, such as this one, but that also will hopefully, we'll still be doing programs virtually, but hopefully we'll also be incorporating some in-person programming starting next month as well. So again, keep checking the website and the library calendar. You can go to alexandrialibraryva.org/virtual to find out all the virtual things that are happening, or you can do /events just to look at the events calendar and see everything virtual or in person. We do have some in-person programming happening outside right now. We have some Tai Chi classes happening weekly and story times and other children's programming. So, so if you are comfortable coming back into the library, we do have some things going on. Additionally, if you visit our website and add /digital-collection, you can see all of our digital resources, and these are ebooks, e-audiobooks, digital magazines, digital research tools. So we do have a lot of things like that that you can access through our website. If you would like to email our reflib at alexlibraryva.org, you can receive updates on upcoming events and programs. I do have a financial programs email list that I send out monthly when we do have programs. So if you're interested in financial programs in particular, you can join our list and find out more about what's happening specifically, as well as visiting our library calendar. And currently masks are not required in the library, although they are encouraged. So if you want to come in, just be aware that not everyone will necessarily be wearing a mask. So, but yeah, that's everything that is going on at the library. And again, thank you, Jessica, for another excellent program. I learned some things as well, and I've been following this public service loan forgiveness very closely. So.
Oh, good. I'm glad. There have been so many changes over the past year. This requires me to update my slides every time the government does something, but usually it's updates in a good direction. So even if it makes it a little bit more confusing for everyone, just getting to see forgiveness happen for people who never thought that they would see it has been really, really heartening and really, really fun to watch. And so I hope that some of the folks who can take advantage of this information will get that done, and only good things will come from student loan reform moving forward.
Yes, indeed.